right, good morning, ladies and gentlemen. Today is Wednesday, August 12th, and welcome to another edition of the Wednesday Live Show. Kind of in the middle of the dog days of summer here, but the market itself keeps climbing and climbing, and it's pretty amazing, quite frankly. Every dip's getting bought. Every time the market looks like it might want to pull back a little bit, they buy it before it even takes a dip. So jump right into the chart here of the S&P 500, which is nearing the all-time high. Amazingly enough, with everything that's going on, there's the all-time high right there. And I mean, we're literally just a stone's throw away from it, right? One day, I mean, the market could do nothing all day, and then in the last 10 minutes, it could rally up and hit that. So I mean, it's practically the funny thing is it's practically a given, which always should make you skeptical. But look at some of the other markets. You look at the Nasdaq; it just blew right through the February high. So, but there it is, the proverbial V-shaped recovery. Now I drew this trend line a while back, and yeah, basically that trend line right there, which goes from the low in May to the low in June. And it's kind of that just kind of shows you that the trend is up, and as long as that trend line's headed up, as long as the price is above that, then it's all good. And so, boy, you don't really you don't really see many dips on here, even since the low, which is kind of amazing. I mean, it was a little, there was a lot of obviously, the market pulled back what 45% or something, and some turbulence off of the low. But there's a few little dips on here. Couple of days back here, couple of day dip, couple of days. Um, this is kind of like the biggest one here. I don't even remember honestly what that was, what caused that sell off, but recovered pretty quick, and so there it is. And now, we're, like I said, we're in the dog days of summer, and so the ranges are kind of small, and it's kind of boring. It was a little bit of a late day sell off yesterday, which was kind of just came out of the blue, and I didn't even, quite frankly, I didn't even look to see what the news was. Didn't pay attention to it, but in the big scheme of things, I mean, it was nothing. And so you have a chart here that's got, where's my chart with all the moving averages? So there's your 200 day. It's kind of, it's still basically going sideways, but starting to slope up a little bit. The red is the 50-day moving average, right? Which is trailing up under that trend line. And then of course I have the 9 EMA on there, which is a real fast moving average that runs along with the MACD. So anyway, it is what it is. And amazingly enough, the market just sort of continues to drift higher. The intraday has been kind of boring lately. A lot of dull, sort of sideways, choppy price action. You get a quick rally out of nowhere and a quick sell off out of nowhere, and then not a big deal really. So, but yeah, I mean the market is the market is definitely climbed the wall of worry, and so it's going to be interesting. I would expect. Let's see, today's Wednesday, and so at some point in here, the S&P is going to hit a new high, and it's going to be big news and all that kind of good stuff. Let's look at the Qs while we're here. Go back to my simple chart with nothing on it. Yeah, so this is pretty amazing. So if you think about it, the S&P 500 is the S&P 500 is like here, right? And you can see how the Qs rallied up to the previous high and then just kept going. There was a little bit of volatility there, blew through it and sort of retested it, but yeah, same sort of thing. The trend is higher until you get a violation of trend line. As much as it seems contrary to common sense, right? You can't overthink it because being objective. That's what that's what the system itself is 100% objective because it's just looking at the price data, right? It's looking at the price data and obviously the trends, and it's programmed to pick stocks and look for stocks that are having a pullback in the context of a primary uptrend and looking for a good entry point. So pretty amazing. Russell 2000, boy, the Russell 2000. Look at this. It made its all-time high back in August of 2018, like 2 years. This is a 2-year chart. These daily charts, if I squeeze them all the way out, they go back 2 years, and so there you go. 2 years ago, the Russell made its all-time high, and still got a little work to do to get back there. But it's look at the sell off too. The sell off was almost even more dramatic than the other indexes because of those gaps, right? Just literally collapsed in a very short amount of time. If you think about how many trading days it was when it started selling off, I mean, I'm almost tempted to count them, but I won't. But anyway, so here it is. I mean, battling its way back, and and of course we all know that the oh, last look at the Dow here. I think I drew this little triangle last week or the week before. You can see how it broke out, and so there you go. Dow's got a little bit more work to do. I think the financial media would just love for the Dow to hit a new high because that's what they always seem to focus on. I mean, it's always great, they talk about technology stocks and Nasdaq, and then when the S&P hits a new high, they'll get all excited about that, but they're not really they're not really ready to throw a ticker tape parade until the Dow hits a new high. And so it's got some work to do, right? It's got 1,500 points or something, but anyway, it is what it is, and so the indexes are kind of strange to begin with. So one strange thing that's going on, right? Apple announced a 5-for-1 stock split, and and so instead of, you may have heard this, but instead of Apple being like super highly weighted in the Dow, it's going to like drop to where it's not weighted in the Dow, which is kind of interesting because, I mean, it's perfect timing, right? With the Dow, close to being back to the highs or whatever. So whatever whatever happens to Apple is not really going to matter so much for the Dow. So that's going to be unusual. So Apple's had just a tremendous, I mean, absolutely tremendous rally off of the lows, and of course, it's these marks on here. These were the targets for the recovery play when we put the recovery plays back in March in there, and you can see it just blew right through those, went right through the all-time high, and just kept going. So pretty amazing. And of course, Microsoft, Apple, Microsoft, Facebook, Google are there's Microsoft with the recovery targets. But yeah, these are the stocks that are really sort of driving the market. And amazingly enough, we're starting to see like some sector rotation, I guess you could say. But these things are holding up pretty well, but we're seeing some sector rotation. So with that said, let's dive into the open trades here. And we'll start off with, I might as well just work my way from the top down this time. So anyway, this QGEN, right? This is basically triggering in today, right here, and had a little gap down this morning. So what's interesting about this is that, so there you go. There's there's basically the entry, right? So the idea is that it's on the pending list. It has a trigger price. First, when you get a close above the trigger price, then the very next morning it's a buy at the open, essentially, or right around the open. And if it gaps up over the trigger price considerably, then you can consider taking a half position and setting a limit order at the exact trigger price. If it gaps up a little bit, kind of like this. So the trigger price was 47.75. The open today was 48.29. You're talking 50, 60 cents. So not a big deal. But what's most interesting about this QGEN is that we literally just closed the trade in this, a week and a half ago, right? So the original trade in this back in June, triggered back here, and then you can see there was the target and all the trailing stops, and he really made a significant move. And then finally, that trailing stop got all the way up here, and it finally caught up with it. So in theory, still a pretty interesting stock. And then it had this relatively significant sell-off. Right, it looks pretty significant on the chart. So the thing about this particular stock is that the percentages that it moves are sort of low, right? It's kind of it moves in low percentages. You can see the increments over here, 25 cents, not a big deal. A $50 stock. So anyway, the sell-off was pretty dramatic, but the system said, hey, looking for a stock in a primary uptrend that has a sell-off and then a trend reversal, and so there you go. So it'll be interesting to see if this particular stock is able to repeat this sort of massive move that it had before. Kind of interesting, here's I like to look at the charts and see if I see anything similar, but had a pretty big sell-off here. It was kind of a sell-off to close the gap, but then it just continued on its way. The prior trade in this stock, that sell-off was real nice and sort of orderly and clean, whereas this one was pretty significant. So it just fell really hard. But given the stock had gone parabolic prior to that, so we'll see what happens here. Probably in a decent buy spot here. You could always just set a limit order that may or may not get filled at the actual trigger price. We'll just have to see. What was pretty amazing about the prior trade here was the number of days where it had a higher low in a row, right? It pointed that out at the time. It just started taking off, and every day the low was higher than the previous day low. Literally all the way from, here, call it July 8th. If you look at this, look at the lows on all these daily price bars. And even up here, the lows all the way up to the very top. And then the day after, you had that inside day. And then basically it got stopped out. Or I won't say stopped out. It hit the trailing stop on the first day that there was a lower low. So after it peaked out. So anyway, still totally viable for a resumption of the uptrend here. That stops like way down here to start off with, and my guess is, a couple of days up here above the trigger price, then this stop will come up. So anyway, so that was just basically triggering in today. Now, interestingly enough, it did actually gap down, practically 1%, but a gap down from yesterday's close. That's kind of interesting, but looking pretty good. So, all right. So anyway, let's see. Moving down the list here, we have next up on the open trades, we have Fate, which had a pretty good looking pattern and looks like it's sort of fading down a little bit today, but this is one I think I talked about. And here's another one that just had a trade in this prior, and then this real nice, it's kind of a nice orderly pullback, and then basically another sort of change in trend. So um, this one, and I pointed this out about how these bars or candles, if I had a candlestick chart up, how they overlap a lot. I mean, there's a lot of up and down volatility within the primary trend, and so not a huge big deal that we're getting a little fade down here today. Actually, past couple of days. So yesterday there was a lot of kind of nasty price bars on a lot of stocks, and so there you go. So anyway, yeah, big sell off here, and then sort of a resumption of the trend triggered in and did pretty well. And then you got another sell off, and then another trend line break, and sort of resumption of the trend. And so the trick here will be that that it reverses this and continues in this trend. It's a little premature to draw sort of an uptrend here, but I suppose I can. But generally speaking, it wouldn't be a big deal for this to pull back to around $30 or whatever, and then this trend line won't be quite so steep. The steeper the trend line, obviously, the bigger chance it's going to get broken. But that doesn't mean, just because I drew a trend line between these two lows, that doesn't mean if it comes down here to 3280 and then pops back up, that doesn't mean that this uptrend is negated. So anyway, this particular stock, you can see the volatility up and down, up and down. A couple of big down days over here, and then it just took back off. So anyhow, it is what it is, and hanging right around the trigger price here. Still above the trigger price. Actually, you made a pretty decent little move past the trigger. So this is one that basically triggered in right at the trigger price, right? Well, maybe a little bit above it. So this is the day it closed above the trigger, and then so there would have been the actual entry. So this is relatively new. It had a big day that day too. So there you go. All right, moving on. VNet. This is kind of wild because this one made a huge move, a couple of big long range days, and then came within spitting distance of the target up here at $28, and then sold back off. So still looking pretty good. Just hanging right around the entry point. No big deal. Just hanging right around there, and kind of looks to be reversing a little bit. So the initial stop hasn't moved yet, which is which is probably good, right? So I always talk about the stop being a function of price and time. And so, this one day way up here, if the stop had moved up too far, then it would have gotten tagged. And so, as you guys know, the sort of the key to everything is that the trailing stop is designed to withstand normal price volatility and not get taken out. However, it's also designed to trail up as quickly as possible. So it's sort of, a lot of times the initial stop will move after a day or 2 days. It just depends on what the price does. But in this situation, so it's actually a good thing that the stop didn't move up, so it didn't get hit, and still looking pretty good here. So it just needs to, it's just kind of a little a big pop and then a retracement back to sort of retest that area, and then it looks like it's needs to get over yesterday's high, but it looks like it's trying to sort of hang on here. Gapped up a little bit this morning. It's a pretty volatile stock. Moving on, we have Nike, and Nike had a really nice sort of pattern to trigger it in. Yeah, there we go. a couple ways to draw this trend line, but that kind of looks the best fit. Really looks like this, right? Across these highs, and then it did break above it and kind of come back down. But so anyway, the trigger here was 97.80. This is a pretty interesting one because based on the way that we recommend that you take the entries, this particular day on 8/3 was the first day it closed above the trigger, right? So the next morning you're thinking, okay, well, Nike's in play as long as it's trading above the trigger. And then so it gaps down, excuse me, and the open's 97.79, basically right at the trigger. And so, it's kind of a decent opportunity. It's a mental thing. I mean, in the big scheme of things, these swing trades that do well, it's not going to make a big difference whether you get in at the trigger price or a little bit over it or whatever. I mean, in the big scheme of things, the ones that work and keep going, it doesn't really make a whole lot of difference, as we've seen over the past couple of years since we introduced this. But it's always kind of reassuring if you're able to get in like right around the trigger price. That way all the percentages and the numbers that the system calculates match up. But so anyway, there you go. And then long range day following the day it triggered in, and then a really nice sort of move here. Long range day on Monday of this week. Excuse me. Now it's just kind of backing and filling a little bit. So a pretty nice move here. Trailing stop, kind of moving up here a little bit. Last night's update brought it just under these lows from a couple of days back, and so I'd pretty much expect this trailing stop will come up again after tonight's update, somewhere up in this neighborhood. So looking pretty good. That was a pretty nice move there. Up to, let's see, the high so far 107.33, and so there you go. I mean, a lot of these stocks nowadays they tend to get something going to the upside, and then you get a really quick sort of persistent run. And so anyway, Nike's kind of it's pulling back to like retest the break out of this high back here, but still, all in all, looking fairly decent. You might get a little, over here you had a long range day and then a little retrenching, and so you might tend to get something similar to that where you get a little retrenching and then another move higher. So all in all, looking pretty good. Moving down the list, this Palomar Holdings is the biggest percent gainer of all right now on the list. So it's got a pretty good move going here. It did trigger in a little higher. This is what I was saying before, a little bit higher than the actual trigger price, but it's made a pretty significant move here. And boy, that's it's just sort of, the market's going to do what the market does, and individual stocks are going to gap up and they're going to gap down and do whatever it is that they do. But we have no control over that. And so, if it would have closed right over the trigger price this day, then, would have got it filled right at the trigger. But in this instance, obviously it gapped up a little bit. But the trick that I always talk about that you guys know is that basically if you go ahead and jump in at a higher price, like this was the open the following morning after it triggered, then you just compensate by adjusting your stop up by the difference, in which case, it hit the target anyway. So there you go. So the original target 94.25, and so really nice. I mean, just a really nice persistent sort of breakout happening here, and it is what it is. Looking pretty good here. Quite frankly, this thing looks like it could easily easily break out to a new high here. So you can see a lot of momentum stocks yesterday sort of had a reversal bar, and the markets. Boy, S&P's getting really close to that new high here. So this one's looking pretty good. The trailing stop is already up over the calculated target, and so far so good. All right, ADI. I don't know what I typed in there. ADI is just kind of still looking good. Got the nice little pullback pattern, and then this is not kind of a 2-day pivot low, and then a reversal, and so it's looking halfway decent here. Nothing too exciting happening with this. It's kind of drifting, but quite frankly, if it can, yesterday's high, it was sort of on its way, but it's looking pretty good. It looks like it's going to form a big cup here, and theoretically like cut back up towards these highs. So it's looking pretty good. Moving on. Okay, this is sort of an unusual circumstance here because ZTO, you may have noticed this on the homepage. ZTO is getting closed at today's open because they're coming out with earnings after the bell. And so, as you know, we don't hold stocks over earnings. And so what we got to do is basically just close them out ahead of earnings. So came really close to the target. I mean, it made a pretty decent move there. Kind of, it kind of spiked up towards the highs, but it never closed up there, and then started fading down. So anyway, long story short, we're still in earnings season, although we're at the tail end of it. And the funny thing is, we haven't had a lot of stocks that this time around that have gotten closed over earnings, right? So usually it's one of those things where there's lots of open trades and they get closed over earnings. But so this one basically is gonna be a wash. So we don't want to hold this over earnings. So, you never know what could happen. See, the idea is that we want to avoid something that looks like that, right? That's the pitfalls of holding over earnings is you get like a big gap down, and I mean, who knows? We just don't want to take that chance. There's no edge in holding a stock over earnings, and so we just basically close them out. We had one that triggered last week, or maybe it was on Friday or something. But anyway, there was a stock that triggered, and then the system doesn't know when earnings are coming out, so I have to manually kind of look at that in my Thinkorswim, and lo and behold, a stock triggered in on Friday after the close, and I think they were coming out with earnings on Monday, so we just basically had to delete it. What was that? Fold? I'm trying to remember. It might have been. I don't know if it. Nah, I can't remember exactly which stock it was. I'm thinking it was Fold, but I may be wrong. Anyway, yeah, it could very well be. I think it was. I think this was going to trigger in up here, and then earnings came out, on Monday morning before the bell, and you can see this wacky price action here. So anyway, we just deleted it. But so ZTO is basically just getting closed out here today. So a little bit of a basically a wash. It triggered in right at the trigger price. Right, it's a little bit higher now, and so we always use the open as, or the system I should say, uses the open as the price in which it will just go ahead and close out the trade. All right, moving down the list, we're almost through the open trades. XOP, which is an ETF, oil and gas exploration and production. It's actually very similar to XLE, which everyone's familiar with, right? Except for it's a little bit more representative of the sector because XLE is so heavily weighted in just two stocks, ExxonMobil and Chevron Texaco. Last I checked, which has been a long time, but a long time ago, I used to, when I talked about these energy ETFs, I always favored XOP because it's really super broadly diversified, whereas XLE is like 30% in two stocks. Doesn't make much sense, but amazingly enough, we're starting to see some interest in these energy stocks, right? It's kind of a slow mover, being an ETF and everything, but it triggered in and then sort of started declining and had a little bit of a retrace. But you can see that the initial stop just kind of hung there for a long, long time, and then there was a little pullback, and then it's kind of it's made a higher high. So it's, quite honestly, it's looking pretty good here, right? It's basically at the point now where I can draw sort of the change in trend line here, right? Oh boy, S&P's getting really close to an all-time high as we speak. Yeah, so there's basically the change in trend line, and I'll extend that down a little bit. And so there you go, looking pretty good. This was pretty amazing back here, and I can't remember exactly what the news was that sent this thing sort of parabolic here for a couple of days. But I mean, it retraced a lot of that, made a higher low from back in May, and I mean, it's still got a long. It's very beaten down. If you go back, like, this is a 2-year chart. Look how beaten down this is, right? So, but then again, in the short term, and so the system's kind of looking at a shorter term time frame as far as looking for the uptrend and the pullback and the resumption. So anyway, this looks like it has a lot of promise, quite honestly, and relatively low risk because it's an ETF. It's a lot less volatile than individual energy stocks, and we don't really have a lot of ETFs that cycle through the system, but this one seems to be doing okay, hanging in there. And it doesn't look all that impressive on the chart, but you figure, $53 for an entry, and it's up 56, so it's up a few bucks, looking pretty good. As of the close yesterday, it was up 4.5%, and so it's up another percent today. So far so good. And let's see, I never did draw the target on this. The target is $60. It's got a little work. It's got a little work to do to get up to the $60 target here. If it makes it, that will end up being a pretty nice little move for an ETF. Mark that real quick. Target $60. There you go. Last but not least, open trades, Honeywell. And Honeywell hit the target. I didn't mark that on here either. This one triggered in a little bit weird, so that's probably why I didn't mark it, because the target was 156, right? Which, but you got that gap up on the trigger. And so anyway, trigger 146, target 156, and like I say, you can a couple ways you can play it as far as the entry on the gap ups like that. There we go. Whoop. What am I saying? 156. There we go. Oh, but anyway, so far so good, right? Still looking pretty good, even with the crazy gap up on the entry. The initial stop went kind of at the bottom of the pattern, and then the trailing stop went moved up to just under that little pivot low right there, and then it's had a really good run the past week and a half, right? Just kind of had a little bit of a gap fill there, and then just a really nice run. So looking pretty good here. And I look at a lot of charts, and you go back to like the January, February highs, and they all basically have the same sell-off and then different sort of patterns on the recoveries, but most charts look kind of similar. You have the ones that have the sell off and then just the V recovery all the way back to the prior highs and then some. And then you have certain like the industrials and the financials and um, stocks like this. They had a big recovery and then a little bit of a. They're still hanging on, I should say, still kind of hanging in there. And they haven't made new high. They haven't rallied back to the highs yet. And so I think it seems like some of the money is starting to rotate into some of those type of stocks and maybe away from the big tech momentum that's been really driving things, but who knows? So Honeywell, pretty much of I would consider that to be a major industrial stock. So look at the industrials here. XLI. So yeah, similar pattern to Honeywell. Look at the financials. People are starting to get excited about the financials again because we had a little bit of a rally the past few days. And but as you can see, um, this line here goes back. I've got that drawn on a monthly chart, by the way. That was let's see, back in 2007. That was a long time ago, wasn't it? That line goes back to 2007. So, what, 13 years ago? This is a good illustration of the concept of what matters is your entry point, right? I mean, if you think about this, all right, so you're looking at 20 years of the financials. And so kind of getting off on a tangent here, but theoretically, I didn't mean to move that line. There we go. Nobody talks about this, but so here's the current price. As you can see, like the current price right here, right? And so basically, if you bought anywhere below that, you're looking good. If you bought anywhere above that, so any entries in XLF in this zone here over the last 20 years are underwater. It's as simple as that. And so, it's kind of like the V-shaped recovery. And so you come down here and anybody that took any entries in this zone is looking good. And so, that's you don't hear much about that. It's a funny thing because I believe it was I think it was pretty sure it was 2018. Maybe it was 2017, but I'm pretty sure it was 2018. Yeah. Like the Barron's Roundtable, they had like 10 of the foremost experts or whatever, money managers, all the big names from the big firms and that picked the financial as like their number one sector for 2018, right? The financials, and that's obviously probably due to some recency bias because the financials had such a great year in 2017, and they probably figured that they were just gonna keep ripping higher or whatever. But anyway, long story short is like all the experts got it wrong because 2018 was a horrible year for the financials, even though they thought it was going to be the number one sector. And I mean, worse yet, if you loaded up on financials in 2018, um, you got 2019 they rallied back to the high from way back here, but you can see that everything's relative to what you paid for it. So, and I'm sure this pays a little bit of a dividend or whatever, but geez, the price is barely over what it was 20 years ago. So, that, just goes to show that what matters is where did you get in. And so, it's like the S&P, right? Anyone that was unfortunate enough to be buying at the highs back in February is just now getting back to even after this, right? And so anybody that had the nerve to buy into this or on the other side of it, loading up over here, sitting really good. So I mean the S&P is only up if you start at the very beginning of the year, it's up a few percent on the year. So, and hey, who knows? Who knows what the rest of the year has in store, right? But pretty amazing that we're almost all the way back here to the highs. So, all right, well, real quick before I wrap this up, let's take a look at the pending trades because there's only 5 of them. Right? When you get in these big up cycles like this, what happens is the pending stocks tend to trigger in. Pending stocks tend to trigger in, and then they become open trades, and then they slowly get closed. Boy, this is so mRNA is pending trade with a trigger price of 77.50. Right? And so I noticed this morning, so let's see, where's 77.50? That was way up here. All right, so it's like up here. So anyway, this morning this thing was up huge. They must have had some news. Well, actually, there was some news. I saw it on like the NBC nightly news last night that these guys are preparing to have 100 million doses of a COVID vaccine. Right. I'll tell you what, there's so many companies out there that seem to be working on vaccines or therapeutics or whatever. That's why the biotech sector is so hot. Anyway, long story short is this is a pending trade, but look at what it's doing here, right? There's a lot of red bars here. So there's a trade back over here that didn't really work out. Well, I mean, it wasn't a big deal. It like triggered in and then went nowhere and then had this big down day, right? Like a couple weeks later, but the trailing stop had moved up. So the trigger was 61 and the stop had moved to 60. So it was just sort of a weird, unfortunate kind of entry there. Although, the thing of it is this stock is insane, right? You can see by the price action. So had a big run up and then a big sell off and then was looking, the price action got kind of tight over here, so it was looking pretty good for a big monster move, but it just didn't pan out. But fortunately the trailing stop, enough time went by that it trailed up and then it got knocked out here, but then look what happened. And so this is an extremely news-driven stock. Might as well just delete that off there because it's totally not relevant where the target was. But anyway, long story short, this particular stock is back in play after this sell-off. And by the way, this will change, can and or will change on a daily basis, right? The trigger price. So, but it doesn't look like it's in doesn't look like it's in any risk of triggering in anytime soon, quite honestly, unless there's a big reversal day. So anyway, and this stock is so volatile, it makes me nervous a little bit. AKAM. I accidentally typed the wrong thing in here. All right, so Akamai, we had a trade in this previously a while back, and it's got this little sell-off going here, and so as of right now, the trigger price is kind of out in the future. So, and you guys know the sort of the concept of this is that it's it's selling down a little bit and there's no telling whether it'll keep selling off or not or whether it'll reverse. And so sort of the concept is that this trigger price will float down and float down here, and then the price will like sort of consolidate and begin to turn up, and then they will meet out in the future at a different price than is like right now. right? And so it's setting up is basically what it's doing. So the system, the pending trades in the system, what it does is it says, okay, this thing's setting up. And occasionally we get like the crazy, big long range day that triggers it in what I call prematurely. But ideally, the trigger price is going to come down. This price is going to consolidate. You got an inside day today, maybe you get a couple of days, and then into next week they meet, down here at a little bit lower price right when the change in trend is happening. And so you've probably seen that happen on a bunch of them before. But moving on, here's another case, same sort of thing, looking pretty good. Nice looking stock. It's having one of these pullback, just like it had, it had a pullback over here that looked like it lasted, month-long pullback or whatever. Just a real kind of crude channel. And then the trend went into resume. Trend resumption. That's what I was looking for. So, yeah, you almost, the February and March sell-off or whatever, they skew just about every chart. So now enough time's gone by that you can see some actual, behavior of the stocks, patterns developing and that type of thing. So anyway, same thing's happening here. We're getting a little bit of a pullback in this particular stock, and when it runs its course, and then if and when it runs its course, and then you get sort of a trend resumption, well, this will theoretically will trigger in. Two more. Walmart. And Walmart is kind of Walmart's got kind of an odd pattern because there's barely any of a sell-off here, right? I mean, it's just hanging right here around the highs. So this had I don't know what this was all about over here. It almost looks like earnings or something. So, but I don't think it was. But anyway, that was kind of weird. It like triggered in and then had all this crazy, this crazy move, and then came right back down. So anyway, Walmart. I suppose that you could say that. Excuse me. This is enough of a pullback. You got kind of a little pivot low here. Real little sort of subtle change in direction, but not too exciting, to be honest with you. And last but not least, Ballard Power, which looks like a big Head and Shoulders, right? So I mean, here's the thing about this is that stock was in a nice uptrend, big move, and then a pullback and a little bit of a consolidation, and it looks like it has the potential of failing. If that happens, it'll just drop off the list, basically, right? So there's still some potential here, like if it can break above all this area right here, and you see this. I mean, a lot of Head and Shoulders like a very unreliable pattern, right? So you can spot Head and Shoulders all over the place, and what happens is you get what kind of looks like a Head and Shoulders pattern, but then out in the future, the stock just kind of, the right shoulder turns into something like that, where the stock just rallies back up. So if it breaks down probably below these lows here or whatever, then it'll just drop off the list. So it's not really, it doesn't look like it's in any jeopardy of triggering in. So kind of an ugly pattern, but you never know. It could consolidate over here and turn back up. Obviously, there's some other spots on the chart, right? Look at this. This is almost a real small version of kind of like what we're seeing right now, right? Big run up and kind of a parabolic move, and then gave it all back, and then look at what it did, right? So, anyways, it is what it is, but there's kind of I'm gonna say it's like slim pickings, sort of, just based on the idea that well, let's look at the cues here. just this relentless sort of march higher in the indexes without any sort of significant pullback. All-time high is 33.93, and we're at 33.75. So today's high was 33.80. So yeah, I mean 10, 13 points. Easily today, in the next few days here, it could easily tag an all-time high. It'll be interesting. It'll be interesting to see how the price reacts around these highs. So what's more interesting is, is what got us here, but that's for another discussion. So, all right, so we looked at the open trades, we looked at the pending trades. Nothing too exciting on the pending trades, but open trades looking pretty good here. And so it is what it is. And one quick look at QGEN. This is the one triggering in today. So far, so good. And so anyways, hey, thanks for joining me. I will be back here again next Wednesday with another edition of the live show. Thanks for tuning in.